Well, g'day there traders, thanks for joining me in this part 1 individual trade analysis and update as we take a look at the first watch list, which we do each and every weekend. We do have 3 watch lists to work through. This of course is number 1 of 3. So if you're looking for trade setups and good technical analysis, or if you're wanting to learn how to do this and perform this skill for yourself, have a look at our scholarship giveaway. It is a free initiative by Pivot Point Trading, and it is simply giving you access to our first 8 lessons, which are 90 minutes each. So it's approximately 12 hours of premier trading content, the way upon which we break down markets and set up individual trades pursuant to the actual ETFs and also the individual stocks which we look at here. Again, you can move this full circle and apply it to any share, any indice, any market around the world that you want to trade. It's simply a blueprint for success. So what I'll do for you now anyway is start with BRK, which is Berkshire Hathaway, and then we'll make our way down the list. This is the biggest list of the 3. There are 15 symbols to work through, so what we'll do is get into the technical analysis. First of all, BRK has broken above a very strong resistance level, which has been in effect since July 2013. So the original entry in this particular trade was $119.63. We traded up to our first resistance level, I do believe about $123 a share. We liquidated our call positions, and now we've simply been waiting for the next trade to set up. Now it's been more or less the best part of a month, and not too much has actually happened in the way of trade setup with BRK. If anything, it looks to be rolling over, which is a little bit of a cause for concern. Bullish entry still remains at 126.06. It'll be above all of these 3 sort of intermediate highs. But what we need to look at is a good bearish position to be entering into put contracts if in fact BRK starts to break down. Thing is, with the 50, this is a really good buying opportunity for many swing traders, so I do suspect a lot of buyers to show up in this location here. At the moment, I cannot bring this trigger down any lower because I do not have the structure to work with, so I simply have to leave this here. And really what I'm going to do is leave the bearish trade set up at 117.85. This is below these old resistance levels, which are now going to act as support as we move into the future. And if this opportunity or this perspective, this level on the price graph doesn't hold as support, then I would be shocked if this area right here doesn't act as support in the future. So what I'm really looking for in the way of BRK is a new buying opportunity, either out of this box here or out of this box here, as we transition into and throughout April 2014 and also May 2014. So this one is still sort of formulating. It's not completely there yet, but it is something that we will get excited about in the near future. CHK is starting to give us a little bit of structure. What we did have originally was a 23.52 and also a 27.58 level. What I can do for you now is simply move this up a little bit more and say that if we move below 25.35, then we can start looking at entering into bearish positions. The reason I say that is because although the market's been incredibly bearish, CHK has been quite bullish, or at least sideways, so it's showing us relative strength. We also have a strong support level, and we have also established a little bit of a swing low right here. So if we do get a close below this level on good conviction, some good volume coming in, then it'd be a really good opportunity to start selling short below 25.35. Be careful of earnings, it is just around the corner. CNX, this is something that we did get a little bit whipsawed on. That is fine. I still have faith in the actual trade. So what I'm going to do is simply move this trigger. Let me just move this down a little bit, move it up just a little bit more to about 42.14, and say if we get a close above here, then we're trading up to $45 a share, or at least $44.63 a share. The bearish trade still remains. It's at $38. The 50 is coming up, but the risk reward to trade from here as an entry, E for entry, down to this support level is really outweighed by the amount of risk needed to undertake the trade. So it's not something that I'm forcing. These are the 2 trade setups, and I'm just going to sit here until they actually trigger. Now this is a share which has triggered for us. Again, bidirectional trade setups. 29.08 was the original entry down to $27. That did occur in the space of 3 days, and we are breaking down below. Earnings is quite a way away. We have broken below all of these old swing support lows. So really the next target in CSIQ is going to be down here. This is the first port of call, right about here at $22 a share. So it is quite a way to go. It is about $3 of intrinsic value. Is it something that I'm chasing? No, it's not, because it's already made the move. So CSIQ, a good target if you are in this trade, congratulations, is down here. If you're not, let it reset up and then set the entry below the swing lows in a couple of days time. Moving into DE. DE, we were triggered here at $92.03. We hit our target on Thursday, right, with a nice upper wick telling us that there's a lot of selling pressure in DE. On Friday, we have established what we call a spinning top candlestick. So let me clear this chart up and let me just go through some additional points of analysis. As you can see, the exponentials are giving us new trend signals. Now, this is a problem because we could potentially want to sell short below about $90 a share. So first of all, I'm going to move the new bullish trigger up to $95 a share, up to about $98.50. That's our first target in the way of a bearish trade setup. All right, in the way of a bearish trade setup, it's going to be down here at about $87.15 a share. That is my bearish trade setup. I know it's quite a way away from price, but with the markets being overextended to the bearish side, these increasing exponentials that can all act as support, I really want a strong confirmation below $87.15. Let's move in. FSLR, that looks very, very similar to BRK. We're breaking above old resistance highs. Let me just go back to FSLR, old resistance highs. And what's happening is that we're starting, or what appears to be happening is that we're rolling over. Now, FSLR is holding up much nicer than that of Berkshire. You can see with Berkshire, we've broken the 10 and the 20 and it's starting to slope down. With FSLR, we're simply sitting on the 10 and the 20 and the exponentials are moving sideways. So we haven't got that bearish slope yet, but we are very, very close to getting it. In the way of a bearish trade setup, no trigger. I'm only interested in a bullish trigger above $75.30 on FSLR. Moving into Garmin. Garmin, not a whole lot to talk about. It is trending, but it's trending very, very slowly and quite ugly. All right, it's very slow. You have to endure a lot of bearish candlesticks before you get that bullish pop. So I'm simply going to leave Garmin. There are better trades out there, one of which is LLY. LLY 60.45, waiting for the close and move above. Also waiting for the 56.35 bearish entry and close below. We're right in the middle. Let me just get rid of this neutral trigger. We're right in the middle of this channel here. So it's much like the markets. We're waiting for a close either above or below certain levels, and then we're going to act on those individual positions. LinkedIn, a really good trade from last week. 176 was the original entry, out the following day at 165. That's $12 of intrinsic value built into LinkedIn puts. Fantastic trade. Down here at support, earnings is coming up, forget about it. ORCL, Oracle. Again, we had a little bit of a bull flag, which looked to be breaking out and continuing higher. We reset the trade up at 42.06. A little bit of a whipsaw. We weren't re-triggered. But now what appears to be happening is that we're actually rolling over. So what we'll do, we'll get rid of these ones. And then we'll just have a look at this and have a look at what the exponentials are doing. Again, 10, 20, and the 50 are all rising. So the bearish trade on this one is 37.18, above 42.06 on the bullish side. All right, it could get choppy, and we don't have the best framework to work with for this week's trading session. So in other words, do not force a trade on Oracle this week. We can simply wait, be patient, and wait for a better trade setup to come to us. Here's Pepsi. Pepsi, again, look at this bullish trade setup. 85.99 looks really, really good on the bullish side. In the way of a bearish trade setup, we've had this set up for literally weeks now. Very excited at this level over here, and we started seeing a lot of bearish engulfing candlesticks. We did not confirm, but 80.81 is a fantastic bearish entry. Just be careful again. Unfortunately, moving into earnings, volatility spikes. So just be careful, all right? Please be careful. Don't be a fool. Do not leave open contingent orders in your accounts over earnings, because you will get triggered, and you're going to get triggered with inflated option prices, and a lot of that time value is going to be sucked out through Vega, which is a volatility index built into those options because of earnings, a way of sellers to insure themselves against catastrophic loss in the event that a share gaps against them in their own trading accounts. So please be careful of that. Here's Solar City. Again, we've had so many bearish entries on this individual trade. Our most recent one is 55.74. We're trading down here at $53.70. Very close to our next support level. So please just wait for it to hit support, and then give it a couple of days, bracket trade it, and then catch the breakout or the breakdown. Not really a trade I'm looking at this week unless you're already in it. It's all about trade management. Here's another trade, SEE. I don't even know what this is. Sealed Air Corporation. Trading down below $30.81 a share. Bearish, bearish, bearish. We've established that lower high. We're breaking out of that sideways channel. We're moving down to this next buying support level down here, about $29.80. We've got $1 to go on Sealed Air. If you're not in it, don't force it. You've got a skewed risk-reward ratio. If you're in it, fantastic. It's a beautiful trade setup. Congratulations. You should be triggered out either on Monday or Tuesday. Here we go. Here's Soda. Soda is breaking down below our bearish trade at $38.80. If we get below this little wick, let me just zoom in on the detail here. If we get below this little wick here, which established itself in early March. Then it's just going to rocket down to support down here at $34.90 a share. That is $4 of intrinsic value. That's over 10% in basic equity price, wiped off a share in as little as a couple of days. So please keep an eye on Soda. It looks to be moving lower, and it could move lower quite fast. Now here's target. To conclude part 1 of part 3, this is looking like a really nice neck level setting up. We're right at this pivot point right now. We've got this trade set up at $57.70. Now again, earnings is quite a ways away. It's not until mid-April, so it's nothing to worry about. So this is something that I am excited if the markets decide to tank, which they look like they could be doing or setting up to do. Keep an eye on Target. It looks brilliant. Target is all the way down here, pardon the pun, at $54.80. So it's roughly $3 away, which, I mean, it doesn't seem like it amounts to much, but when you trade put contracts, again, that adds up very, very quickly, and it makes us very happy. So please keep an eye on Target. That is, of course, ladies and gentlemen, part 1 of the part 3 individual trade analysis and update, which we do here at Pivot Point Trading for your benefit. If you want to learn how to do it for yourself, have a look at our scholarship initiative. It's fantastic. Not many places at all give away the amount of information that we do on how to actually approach and trade the market. So it's something that I really sort of suggest that you look into if you want to do this successfully and professionally for the rest of your life. So all the best, everyone. I'll see you during the week for some additional market updates. Goodbye.